Having a young teenager learning to drive in your car changes everything. The odds, they completely change. You have more risk, you have more exposure, you have more liability. You're forced into this gamble, this bet with the insurance company, where you're betting that you might get in an accident. The insurance company's betting you won't, and it's the only bet in the world you're actually hoping they win. Odds. 1 in 4 young teenage drivers get in an accident within the first 6 months of learning to drive. And 50% of drivers get in an accident within the first year. So there's literally a 50% chance you may need to use part of your insurance just within the first year with your young driver. Well, you're making a lot of different bets all at once. The first bet you have on the table is called bodily injury liability. This is a huge gamble because accidents happen every day. And if your car causes an injury and other people are hurt, you are responsible to cover their debt. Someone will have to pay their medical bills, lost wages, and even things like pain and suffering. This is why a lot of parents raise their bodily injury coverage as soon as their teenager gets their permit.
Well, yeah, we raised our liability limits as soon as our first son got his permit. We didn't want to lose everything.
We're worried about our liability that we have with a young driver getting ready to start driving, and we're saving a lot of money, and we got 10 times more coverage, and we really needed it, so it's all working out great.
What happens if you don't have enough coverage? Well, you can lose your assets, you can lose your retirement account. In fact, depending on the tax bracket you're in, they can even garnish up to 25% of your wages, and you can't hit the BK button to get rid of the debt. One example is a true story. This gentleman, we're going to call him Grandpa. Grandpa, he was one of those guys, he just paid the bill. He just paid the insurance, been with the same company forever. He didn't understand risk. He certainly didn't understand liability, and he didn't understand the gamble he made that day when he loaned his keys to his grandson. Grandson gets in his car, gets in an accident, and hits 3 people. Unfortunately, all 3 of those people were hurt. They were rushed to the ambulance, they were rushed to the hospital there, and the first one was in the hospital for 2 days, another one was in the hospital for 3 days, and one was actually in the hospital for 6 days. $467,000 later. Grandpa found out just what he was actually betting and what his risk was. Somebody had to pay that $467,000. Well, the insurance paid the first $100,000. There was $367,000 owing. What they did was they literally went down to his retirement account and took out $367,000 out of his account. And Grandpa will work every day for the rest of his life because he was making a gamble that he didn't understand. The solution is to simply hedge your bet with solid, healthy, and appropriate coverages. And that's what we've been looking for. We've spent hours and hours on your behalf searching the marketplace for an insurance plan that makes sense for this situation and fits within your budget. So the last thing we need to do is simply meet. We're excited. We found a way to help you hedge your bet and not spend any more money. We'll see you soon. All right, well, we'd love to answer your questions, so feel free to go to our website. That's gooderates.com, G-O-O-D-E, rates.com, or give us a call. We got people standing by ready to answer your questions in Oregon, Washington. Give us a call. Make sure you got a pen. Write it down. We really want to talk to you. That's right, gooderates.com, G-O-O-D-E, rates.com. Feel free to call us in Washington, Oregon. Let's get those questions answered.